Hello and welcome to the Friday wrap-up presented by the Gockstein News Network. I am your host, Landy, and today is, it's kind of post-dump day, but it's also dump day. But today is also November 21st, 2025, and we're going to be looking at Bitcoin on the weekly time frame here because, much as I alluded to on Wednesday's, check-in video, if 86 was dropped, we were going to go and test lower. Now it's all about the weekly close. And I mentioned this, we can wick fish. And what did we do? Well, we fished right down to $80,000. So, I called out some of the levels at 82.5 being the monthly, and it's kind of get below there. I don't know how much I talked about the weekly at 80, but, it's been on the chart. It's not gone anywhere. It is one of the big target zones. I know that I've talked about it across various spaces. I don't remember quite what I talked about on Wednesday, but, I'd mentioned like little swings down to 84, 85 are fine, even down to like 83 to 85 is a range for dailies. It cut right through that, right to the weekly. And not unexpected, to be quite honest, right? Because what did I mention? Below $86,000, it's kind of full miner capitulation, right? Like even if it's just near-term temporary, shutdowns on miners, and then they flip back on when price recovers and the hash price recovers, then they can flip back on when they're back in profit. But some of them will stay off and try to ride it out till the next epoch, which is 2016 blocks. And there's a few different things that I want to talk about today. First, we got the next big target zone. Bulls want to see closes above $86,000. Now, we're actually doing a slow bleed capitulation. We're not hitting full miner capitulation, but in the near term, in these drops, you'll get dynamic shutoff, right? And kind of saving and squatting. But we still have, we're probably around 18 to 22% of mining fleets are like insanely still profitable at these levels and have plenty of room to the downside, probably to around $65,000 to $74,000, which is the prior cycle closing high and the pre-halving all-time high and the swing low. Like it's right here, right? And I noted this on one of the more macro charts that I shared. Like this is likely going to snowball because what we're going to see is we're going to shed hash rate. Now it's a matter of where does price head from, because what this will provide for if price stabilizes is a snapback rally, and it's all about where it closes from there. And I'd really like to see Bitcoin close above that that big level at $86,000. Really, that weekly is kind of vital. And again, I will maintain this. Rallies that fail to reach and close back above 101, meaning rejected rallies, not good. That's just kind of how things are. Just not good. But here's the monthly that is in danger. And then what's the bigger area to be aware of? It's actually the swing low to 65 is going to be the high. So I said closing, my bad, but it's the first high. And in this case, this is the next big zone to be aware of to the downside. This is kind of the local zone. Like, so, if 80K does follow, there's the weekly at 78, and then it's pretty much below 78. It's down to 74, drop 74. Then we're looking at 65, potentially more, down to 60. 60, 63. What did this high close come in at? 57. It's all fair game, to be quite honest, from here, because the move is still in progress. We haven't set a daily low or anything. There's no like major weekly low or anything like that. So you do need to be aware of these downsides, even if you feel like they're unlikely. Even if I think that we probably get a decent bounce here, right? Doesn't matter what I think. Price action's what matters, right? And in this case, one of the bigger things that we need to be aware of at around that $86,000 is the basis band on the monthly. And again, I've been talking about this, the grind against the upper second standard deviation, right? We got the monthly walk up in a compressive phase. This is a grind up. This is not a true expansion for a Bollinger Band set, measuring volatility. And you can see volatility is stupidly low on the monthly, right? This is full on price compression on the monthly time frame. And we have to be aware of what the implications could be on the monthly for for later. And it helps us define potential downside. One of the big things that you do want to be aware of, we don't want to see the monthly closing in down towards and below this low, and we don't want to see it closing inside of this 82.5, right? That's just not a good look. That's like here's what I'd like to show you. The last higher low back in 21, for instance, just as a simple example, right? Well, everybody's going higher low, but we swung into it. We've already swung into this higher low, so we still have to be cautious no matter what happens on any kind of upside rallies, even snapbacks that are massive that could potentially run back to the highs, because any failures to close above there, it's not expansion to the upside. It's rejection and then back down. But closes above, then we go into March, right? Great. Perfect. Bias breaker on reclaims is going to be 101, especially when it comes to hash rate, which I'm going to touch on here shortly. But you see that lower first standard deviation, when this was actually headed down towards 80K, this kind of midline, which cuts across, guess what? $69,000 right at that lower first standard deviation. Basis is, basis was at 89. And now that it's below, it has adjusted. That's right, because basis was the bias breaker that I've been talking about in that weekly range between 93.5, which is the higher low close, and 86, which is the lower high close on the weekly. There's the swing point, the inflection point there between the higher low swing and the lower high swing at 89 or so. That's right where the monthly basis band is. And I've been pointing that out for quite some time, as many of you know. And closing below it, not going to be a good look, right? Because then we're looking down towards this area here, which is right by the lower first standard deviation of the Bollinger Band set. Right, that is, even if it were to get there sooner rather than later, even before monthly close, that's where we're looking anyway, 74 to 65 essentially, right? And you see the lower first is coming in there right around $69,000, just shy of the high. So that is something to be aware of, right? But we do have to look at and track the local zones here. We've gotten a nice bounce off of 80. It did come on very good volume as well for the daily here, and so far we've been away from that high for 47 days since the all-time high, right? So it's been in a downtrend for about 47 days. I mean, we got the official trend change, lower high trend reversal setup off of 112. Or no, this was 116, 118 zone. And then the dump down to 103.5, 103.650. A reclaim, tried to balance on 107, 108. Tested 116 again. Failed with a swing high there at 116.5 or so. Dumped down to the next level, right? So dumped down to the next level. That next level being the big weekly level between 101 and 98. And you see it tried to hold itself up, rejected, down to 93.5. Tried to hold up, come down to 89. Tries to hold up. It showed that it could push below even that 1.168 at 88.7, that common swing point at right around 89. Traps in the range and then dumps out the bottom side. Showed that it could push below, by the way, 86. Dumps out the bottom side, hits 80K, which is that next big weekly down there. If this does continue down, then we're looking, 80 to 78 is an area of interest, and then the bigger area of interest being that 78 to 74. And then that's where we get into 74 to 65 that I just showed you on the longer term time frames, somewhere around that lower first standard deviation on the monthly, if this was going to continue. Now, turning on volume for this area here, we can see that we put in a nice high volume candle. We're maxing out BBWP, but it's still got room. It hasn't rolled over the SMA yet, which is a 5-period SMA, which also means that if it bounces back up, you're going to get Bollinger Band continuation, right? So lower second standard deviation is going to continue. Price is now back on top of it, but this will continue down even if price mean reverts back in to test this zone. So this is very, very simple. The last lower high is all the way here at 107.5. This rejection at that weekly level that's inside of all of this weekly traffic up here. Understand that that is vitally important to understand what's going on up there. Just realized I don't think I have my horizontals for that up there. Oh, I do. Sorry. I just saw them. 112, 102.5 at that weekly. Okay. So it's just, it's light gray and it's a dotted line. But in this case, overhead resistance is now 86 to 89. Get above that, then we can start looking to that 93.5. Again, back above here, this is the point of control for volume. I've shown this a bit. Not going to really get into it. It's right around $96,000. Need to get above that to go and test 98 to 101. Closes above 101. Do change the picture, but this is such an extended move down that, let's say, just speculating here, that it puts in a low here at this is the low at 80, right? Maybe wick fish is a little bit lower, right? But let's say that's the low, right? We're just using that as an example. What we're likely going to see from here is some sort of a lower high, whether it comes up here and then comes back down to test, and then you look for the trend reversal setup. I've shown this a million times, and this is just an example. This is not what necessarily will happen, but let's say this is the low, sets the low, regains regains 86, comes up lower high around 89, swings above it, maybe hits 90, comes back down for a higher low, equal low setup. And once it sets a higher low, that's your trend reversal setup. Confirmations back above the lower high, because this is so far from the last lower high. So that's what you're looking for in this area. If this is going to turn into a major low and stop the capitulation, we've got an adjustment, a hash rate adjustment coming in probably around November 26th. So we're looking at around 5 days, 6 days, maybe, depending on how the blocks land in terms of timing, for another 2% or 2.5% difficulty adjustment down. And this will provide a little bit more room. Some miners can flip back on and start kicking out hash again. We're still above 1,000 exahashes or 1 zettahash. And what that means is that I don't really see full-on minor capitulation. I think that we are in that zone. We're in full minor capitulation zone, but there is a chance for recovery here if we can find some price stability around these areas, and especially close the weekly back above 86. I don't care where it closes, but if it captures this zone again on the weekly, I think that we have a little bit of runway for miners, so we won't have any kind of forced selling. And maybe we can start to see, we'll still get difficulty adjustments down and on the subsequent December 10th epoch, and then the Christmas Eve epoch on the 24th. Likely still see, I'm looking at like three weeks minimum with some price stability, and then there's the ability to possibly test up further. But again, I think anything closing on the weekly below, like, it can swing above, and I don't care how far it swings above 101. It needs to close the weekly above there, right? And again, this would be a lower low on the weekly, right? So no matter what, it's going to be a lower low, right? And it's taken out a whole bunch of levels to the downside, right? Even testing the weekly lower lows over here. So we would need to then, see where things land, right? Because it'd be even if it started to close above 101, we have to be aware of this wider area between 102.5 and 112, where the basis band is on the weekly up there. And you'll have to forgive me. I know that the chart's a little bit of a mess, so I hope you're tracking what I'm saying as we kind of go, but these zones are very important. And really above 112, that's where things change. We can go back and test 116 anywhere above there. That's the inflection point up there, right? So everything that I'm talking about is like, hey, we can get above 101. That gives us a shot to go for 112. But the real inflection point is going to be closes above 116 that could also beat 118, and then we're looking at a topside run. So it'd be expansion from one side and then a slingshot to the other. And this is likely going to take a while. I say minimum 3 weeks for initial recovery and then acceleration for tailwinds on hash rate, difficulty, so that we get larger corrections in that difficulty. And I'm gonna show you an interesting chart here in a moment that you should pay attention to kind of visualize things. Once we get that 5-10% or more, then we're seeing like, okay, we've entered like a capitulation, like a real, not like a full on capitulation where even the most efficient miners are in the red. That's only really going to occur 74 to 65, that zone that I pointed out on the monthly earlier. So essentially dropping the monthly at 74, which is a break on higher term timeframes, by the way. So very likely to turn into a bear market structurally. There is other conditions there because it could be a deviation. There's all that stuff that's always on the table, but it's very highly likely going to be the bear market. Again, I go back to why have I not called the macro top in? I don't think it's worth it this cycle. I think that even if we go into a full-on bear market in terms of structure and downside, that it's not going to look necessarily like the others, right? So I've been comfortable the entire time. Local top, macro top until proven otherwise. I called 123 to 125 a long time ago. We got 126, close enough. Right? If the local turns into a macro, we'll know it, and we'll know what the confirmation conditions are, right? But so far right now, this is still just a trend break on the weekly, and we need to see what it can recover, right? Whether it's a lower high, higher low, equal low, and then try to, change trend from there. Who knows? We move still in progress. We're still right in the thick of this, right? So there is no low set. When there's no low set, the move is in progress. So we need to see a low, and then we need to see whether or not, it comes all the way back up to 107. That would be crazy if it just slingshot from here all the way back to 107.5 and took that out to trend break and then put in a higher low. Great. Bitcoin can do that kind of stuff. But more likely than not, we're looking for lower highs, higher lows. If this is going to set a low, that would be your bullish case. Otherwise, we're looking for a continuation down to 78 to 80 initially, drop 78, then we're looking to that 74, drop 74, then we can zoom out to the monthly, and we're looking towards that big area that I showed over here on index. I thought I showed it. Yeah, I didn't. It's on the chart. It's just lower. There you go. 74 to 65. I think that would be full-on minor capitulation. We start to see massive tailwinds, and then we get a big old snapback rally. And that doesn't mean that we don't get a snapback rally from here, but it's just been so methodical with price. And the miners have been really, really resilient the entire time. So, we're in that full capitulation zone where it could begin, but we're not quite there yet. So let me actually visualize that for you. This is mempool. There's a bunch of different, you can go to Luxor's hash rate index. You can go to, what's the other one? Freaking hell. Let me look at my bookmarks. There's a whole bunch of other ones, Cambridge and all kinds of stuff. They're all going to look they're all going to look the same. But this is difficulty versus hash rate. And I want you to notice something here as I go into the to the yearly, or I could zoom all the way out to the 3-year, right? We could go all time, right? And then, it's not log scale, so it's going to look kind of crazy. But in this case, what we're looking at is the interplay between what the hash rate is and the difficulty. And you'll note that this is not price. This is hash rate. But price is something that affects it, right? And that can be visualized on something like this chart over here. All right. And, we've got the orange that is the hash rate. We've got price that is the yellow. And then we've got hash price being just absolutely smashed to bits as difficulty goes up. So this forces efficiency and further decentralization over time. But that's a whole different topic. But I like the mempool .space one. It really is good at visualizing. I don't get an arrow on this screen because I don't have paint tools over top of this right now, but you can see that when hash rate's getting, really high, right, we start getting difficulty adjustments up, and that's prices rising, hash rates rising. Price starts to, we start to get hash rate underneath of difficulty, we get a correction. That's a correction in price at February 24. That was post, ETFs. We had the pre-ETFs and then the big run up, and then when in hash rate also coincided with the run up in what price, right? And then we see that this red line chases, that's difficulty. Once it gets over top of hash rate, we get drops, right? And then it gets under, we get the difficulty adjustment down. Hash rate goes up because price is rallying. Again, this is into the 2024 halving where we made a new all-time high. It consolidated kind of in and around difficulty, so kind of in and out of profit for the marginal miners. And then kind of accelerated up. We got a hash rate adjustment, but price continued, stayed on top of it, then got under the difficulty, and then we got a smaller capitulation event. This was not a massive capitulation. This was not a post-halving capitulation. I know that some might think so, but it was not the post-halving capitulation. It was too soon to be that, and it also wasn't as deep as we would have needed for a post-halving capitulation. There's two cycles for Bitcoin. There's the halving cycle and the post-halving capitulation cycle. The every single cycle, I don't care, anybody that's want to talk cycle theory, you can't break Bitcoin's network cycle. It is halving and then post-capitulation halving. Doesn't matter how high price goes. It'll always happen. It's just the higher the price and the less, the more hodling, the more kind of shock absorption the market can take for miners on the mining side. Meaning you can recover quicker without as big of a capitulation for hash. Acts like a buffer or a I can't think. I've been talking all day. I can't think of the other thing that I was going to say. Anyway, let's go ahead and take a look. We come out of that. We hit some new highs. This was 24 into the summer. We come out of that low 49K, I believe, and then we go on our run. Hash kind of gets above. We correct. Hash gets under difficulty. So difficulty races up with price and hash. So as hash picks up, price is picking up. Difficulty adjusts up over top. Correction gets below. Move up. Up over top. Correction. Move up. And then it gets over top. Little correction. Difficulty corrects down. We rally. We get below difficulty. Dump. Then up. Price dives down. We stay depressed until correction. We get above, and then we ride that. And then you see how difficulty over here just stuck right to it. This is not one-to-one with price, by the way. So we're in and around the summer of 2025, right? What do we have? We have, we were coming out of the big dump at 74, right? We're past Q1 at this point. And what did we get? 2025 coming into where we are now. We had a little bit of a correction there. That would have been our right around the 112 run to the 98. But you see price in and around the actual difficulty rate. We dump down, we get a bigger correction down, and then boom, up. We ride it all the way up, and now we started in October, right around the all-time high, just before the all-time high. We were in the range. We dumped down to the weekly, and then we slung shot right back up to 126, coming into the, into that October 6th, 1010, we were coming into the all-time highs. We got the big dump off from those highs, and you see that hash rate dumped off because difficulty was steaming hot up here, got overpriced. It was already overpriced, meaning that we were seeing miners capitulate a little bit here, meaning that, some temporary shutdowns of miners. And the least profitable miners get temporarily shut down. A little bit of selling and profit taking from miners as well. There's many ways that you can visualize that through different quant platforms. Price dumps down. We get a correction. This was our last 2% correction. We rally up. This was lower highs at 116. And then, of course, we get a little bit of a rejection there. We were consolidating between, the low side. The low side, I think, what was the low side? I don't remember now. It was, we started dipping below the 107 area, right? So this is where we were kind of dipping below over here, right? We had kind of dipped below 107 to hit 103, and we're chopping around in this area. So this is 107, 108. This is a weekly high or low. We dipped below to 103.5, and we got another rally to 116, right? Well, what did we see? Hash rate ripped to the upside, caused an adjustment to up. And actually, this is the 2% adjustment right here. Sorry. This was the adjustment before then. We got below as we were chopping around, rejecting 116. Difficulty adjusted up right above hash rate. So you get minor capitulation at the highs. And when I say minor capitulation, it was a small amount of hash starts dumping off, and then we start chasing. We are not in full minor capitulation here. It's if we stay down here, we're going to start seeing this leg down in big chunks. And that's where we're starting to see a little bit of a different look from the hash rate index and the others. But I like the visualization that you can get, a little bit more granular visualization of difficulty and the interplay between hash rate and difficulty. Why? Because if you get under difficulty, hash price under difficulty means you're not profitable, means machines temporarily shut down. Okay, that's what that means. So you get or you get a loss leader, which is you're just mining to sell, give yourself runway, not necessarily expending treasury, although we could be seeing some of that, and we'll have to check on miner flows probably next week. And yeah, that's pretty much all I got for you. This is what you want to see. Be aware that we could very well, come back down and plumb into 78, even all the way down to 74. And if it really does drop 74, we're 74 to 65 as a bigger range, with like right around $69,000 of prior cycle highs in there. So I think that would be minor capitulation. We start seeing things really set up for acceleration in terms of difficulty adjustments down, because that's right on the edge of even the most efficient fleets profitability. So they'll just flip off and they can sit on their hands and just wait. But yeah, you're either looking for some lower highs, unless it can take out this lower high with a higher high up here at 107, which that's a snapback that would really change things. Very highly unlikely from here. More likely lower high, probably somewhere in and around the resistance here between 86, 89, or 89 and 93.5, maybe swings above. Fair game to 94, 96 around the POC up here. And then reality is, no matter what happens, need to higher low, work its way up to 98 to 101, and 101 is going to change the picture quite a bit. But still well out of the woods, not out of the woods at all. Not even remotely close. Probably looking at minimum 3 weeks if this area holds up down here for miners to catch up, start flipping back on. And as long as 7, maybe 8 weeks for, we're looking more around January for those epochs to hit for real big legs down difficulty, if that's going to be the case. Again, there's a lot of ifs because this move is still in progress. So don't worry. prices lower for Bitcoin. Everybody wants to accumulate. Well, prices are going lower for Bitcoin. I hope you've got your levels set where you'd like to accumulate, right? And we'll come back to this on Monday. I hope you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. I hope that you learned something. If you want to, share this out there, you're more than welcome to. If anybody has any questions, get in the comments. Have really, really good questions. Over with, talking, I got to talk to David. I got to get on one of the live shows with David so we can chat about this kind of stuff. But talking to him, behind the scenes, very, very interesting dynamics going on in the market right now. So like he knows my thoughts, but, share it with the audience out there. But I got a chance to talk to a lot of different people today in some very large spaces that some of you might have seen me in, that, a lot of people don't know about this kind of this duality of price, right? That is driven by the token price, of course, but that how the miners play such a large role in price action, and what, the 1010 dump off is what really caused the miner capitulation, because we were at 126. We dump all the way down to 107 on spot. This big dump off from the highs down to 107 up here. When we did that, that's a big freaking deal, man. Because now you're underwater on hash price. So you start to see difficulty is still catching up because it's 2-week lag. We start rejecting in and around this area. You get hash rate rolling over, right? So, and then difficulty chases. So that's what we're in right now. And I will help guide you through this. Especially, if you want to learn and you want to know where to like set your levels, or at least just get a better understanding, whatever that might be. Of course, not financial advice. I'm still net short. I told everybody here when I was net short, when I was short originally. But I'm building out the long side of my position, on the way down. So I'm net short still. And I filled quite a bit here at 80. So I'm sitting happy. That's not, everybody's not happy right now, right? And that's okay. That's where you want to look at the levels and understand, hey, I'd be comfortable buying at this level and then bigger lots at this level down here, and so on and so forth, wherever that might be. Because there's only so much Bitcoin. There's only ever going to be 21 million mined. I don't care how much leverage open interest is thrown on top of it. That's how many Bitcoin there's going to be. And at some point, this compression on the longer term timeframes that I've been talking about for years will resolve to the upside in such a big bang by wiping out all of that open interest, or paper contracts, or people call it virtual Bitcoin or paper Bitcoin or whatever you want to call it. It will wipe it out. And that's not real. It's fake. It's fugazi, however you want to say it. All right, have a wonderful weekend. All right, don't stress too much. Just watch 86 for closes on Sunday. That's going to be 4 p.m. Pacific, 7 p.m. Eastern, 0 UTC, when the actual weekly closes, right? Everybody always asks, like, what do you mean it closes? It never closes. Well, there is actually an open and close for the session candles. That's the times for it. All right, have a great weekend, and I will be back at you here on Monday across various spaces, and maybe I'll see if David can bring me on. I'll ask him. He's been killing it. I hope you guys have been watching David, the breakdown, really killing it with just some really great guests and phenomenal interviews. So really, really, it's exciting. This is when you want to pay attention. Realistically, the upside is great, right? But you want to pay attention, especially if you've been out of position or you got out of position and you're kind of feeling down. These are the times when you want to pay attention to what's going on in the market, because this is where you can identify opportunity, whether it's here, lower, doesn't really matter. You want to pay very close attention in these times, no matter how long it takes, right? Until it turns around, then you get to relax. But yeah, have a great weekend. And I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.